And now, moving on to my next duty, I'd like to have everyone please help me welcome Juan Carlos Sandoval. He's the Chief Financial Officer of Andean Precious Metals Corp, and he will be joining us for a fireside chat with Matthew Gordon of Crux Investor.
Hi, thank you. Yeah.
Good morning, everyone. Good morning. How are you, sir?
Morning. Good, good.
Looking good.
Thank you.
Looking good. Right, we're going to have a little catch up, but maybe kind of set the scene for people. Tell people a little bit about yourself and maybe sort of elevator pitch on the company.
Thank you, and thanks for having me. So I'm JC Sandoval, CFO of Andean Precious Metals. We are a company that have two producing assets, one in Bolivia. We produce around 4.5 to 5 million ounces of silver a year. And our new asset that was acquired late 2023 called Golden Queen. It's a gold producing mine in California. We produce around 55 to 60,000 ounces of gold.
Right, okay. Thing that caught my eye, I think might be worth talking about is the kind of share register makeup.
Oh, let me tell you one thing, because it's an amazing story. It's how the company started. Our founder, who's still the largest shareholder, the executive chairman and CEO, so very committed to the company. He bought about 8 years ago from Corp Mining, what still is the largest oxides commercial plant in the country. But he bought it when it had a very short life of mine, less than 1 year. Right, but what he realized is the location of where the mine was, and or where the plant is, right? And so we started buying more from third parties. You know, there's hundreds of artisanal miners, cooperatives, other private groups. So instead of just focusing on our own deposit, we started buying more from those third parties. Long story short, it became a great success. So throughout the next few years, we were able to build a very stable production profile, like I said, around 5 million ounces of silver. So it helped us. We built a very strong cash balance, very strong balance sheet. As of 2023, we had close to $100 million in cash, no debts, no streams, no royalties. So a very strong, clean balance sheet. So that allowed us to start thinking on, what do we do next? We thought it was important to start diversifying ourselves. It was a strong buyer's market, by the way. So in early 2023, we started looking at an asset to buy, and we looked all over the Americas, from Canada, the US, Mexico, Chile, Peru. Yeah. I mean, you name it. And at the end, towards the end of the year, we decided to buy this producing asset in the US.
And back to the share register question. Who else is involved? Because there's some big names in there.
Oh, the shareholder structure. Yeah. Oh, yeah. Thank you for that. Sorry. Yeah, we're very unique from that perspective, because our largest shareholder, our founder, he still owns a big chunk of the company. Yeah. He owns around 55% of the company. Eric Sprott, who probably you all know, he owns another 15%. So between our founder and Eric, they own around 70% of the company. The remaining 30% is floating, but I believe it's a strong, good argument to say that two of the largest shareholders, they have a big chunk of the company and they're very committed to it. Right?
It's kind of interesting sort of dilemma for you, in the sense that you're building up a big cash reserve, which is quite nice, gives you optionality, but with a kind of share register around sort of what, 30% on retail, is that what you're saying?
Correct.
Yeah.
Correct.
Okay. Trying to keep that liquidity moving. You've had a kind of good run recently.
Well, yes, no, absolutely. Eventually we would, expect to have more float, right? But my margin, my float, my volume has significantly improved. About a year and a half ago, we were trading 20,000 shares a day. We're up to 250,000. So it's getting better.
Good. Let's talk about both projects, because I think as an investor, and certainly to development and producing companies, we like to sort of understand what the company's intent is in terms of its ambition and so forth. But let's deal with what you got today. Both projects. You want to start in the US or Bolivia?
Well, we started in Bolivia. We moved into the US. We once again have a strong balance sheet. I guess it's everybody's asking, so what's next for the company? And what we have been saying is we're trying to change the risk profile of the company to being more North American focused, right? So yes, our intention is to both keep growing organically. We have, within our two assets, we can keep growing organically, but we're well positioned to probably make another acquisition, and most likely, well, we're focused on the North American market. That does not mean we wouldn't look at something outside or in South America, but our focus will be the North
Tell me about that, because obviously there's going to be pluses and minuses in different jurisdictions. I mean, Bolivia, is it a relatively easy place to do business?
Well, here's the thing. Whenever you invest in a country like Bolivia, like I've always said, you always need two things. One is that there's certainty, that they allow you to work, that there's no change in laws, changing tax codes, to expropriation threats. From that perspective, Bolivia has been even more stable than many of its neighboring countries, right? Basically that they allow you to work, right? We produce, we pay our taxes, we contribute a lot to our communities. And then the other one, which is as important, is that there are no currency controls. You can get you pay your taxes and you can get your money out. All of our money right now is sitting in bank accounts in the U.S. and Canada.
Right. It must be like different cost structures, though, which obviously affects margins.
Oh, well, absolutely. And well, here's the thing as well. In Bolivia, we're not a traditional mine, as I would call it, because we're more of a processing facility. About a year and a half ago, finally, after so many years, we decided to stop mining from our own deposit, to free up that capacity from our plant and keep buying better ore from third parties. So we're more of a processing facility, and we're always going for that refining margin. And the U.S. is different. The U.S. very traditional.
So you can sort of keep filling that down in Bolivia?
That's the plan.
That's the plan. So it's a very different sort of setup, very different set of skills and team doing that. So North America, we always look at sort of return on capital invested and margins and all of that, because we're here to make money, and you seem to be making money. Is that a factor of the price of the metals that's done that for you, or what efficiencies are you driving from the operation?
That's a good question. I think it's a combination of both efficiencies throughout our operation and gold prices. Let me give you this example. When we acquired that company in November of 2023, we used an average gold price of $1,900. I mean, we're selling at 30, whatever it is, right? So I'm making an extra $1,500 per ounce of additional revenue that I had not foreseen, right? So yes, the commodity price is a big component of it. But on the other hand, Golden Queen first of all, we invested a lot of money last year, more than $30 million from our own money. So we expect a more reliable operation on the road. Right. And we have a very detailed mine and plant optimization, and it's well underway. So yeah, we're working on that.
So just tell us about the current operation and some of these efficiencies that you're driving. What are you working to? Is there more to come, or is it kind of steady state?
Yeah, well, when we bought the company late 2023, we knew we needed to invest. All of last year was a year of consolidation, investment. Let me give you this example. So the truck fleet. We brought a specialist who told us, guys, don't spend any more money because the previous management had not done the right, proper overhauls. And so at the end, we decided to completely replace the fleet, right? So that, we have a brand new fleet, they're more fuel efficient trucks, bigger beds, and things like that should at the end translate into having better margins, right? So it's a combination of a couple of things that we're doing in the U.S. to improve our margins, improve our production and our production profile.
So how many ounces are you on a
last year we produced 55,000 ounces. We expect something similar this year.
Right, so that's a kind of steady state production on that.
Yeah.
M&A, you talked M&A, every company talks M&A, but you've got cash to back that up. So in terms of the kind of profile that you're looking for, can you tell us about
that's a great question, because everybody's saying, okay, guys, you have two good producing assets, cash flowing, you have a very good, strong balance sheet. I have $100 million in cash. I have 80 million of liquid assets that I can dispose of. Yes, we are looking for, we're looking at an M&A deal, actively looking. We're paying particular attention to the U.S., mostly gold and silver. We can also look at copper. I think that if you buy into the idea of where the energy transition is going. Eventually, copper will be strong in the midterm. I mean, I wish I could replicate what I did with our acquisition of Golden Queen, buying a producing asset at a steep discount. I know nowadays that's more difficult. I wish I could buy another producing asset, but it comes at a price, right? And there aren't many in the market, and if it's there, it's because of something else happening up above. So I have to open my options, right? We're looking also not only at producing assets, we're also looking at development projects, projects late stage projects. We can bear some of the permitting risk, so obviously the construction risk. So we have opened, our options. So we're looking at everything.
Right, and it's quite competitive out there at the moment for sure. So, do you think your team has this sort of mentality of we don't mind brownfields, we don't mind fixing things, and maybe that gives you a bit more exposure to a few more projects?
I think we have a very good idea as to where we want to go. Our founder has been saying this all along, and yeah, like I said, changing from being more South America to being more North American, producing asset preferably, but you have to be realistic as well as to what you can accomplish, right? Buying a producing comes at a price. So I mean, there are some very interesting projects. What we need to do, Matthew, right now is we need to extend the life of mine of my U.S. operations, and we're well underway on an exploration plan.
What is the life of mine?
It's around 5 years,
5
and
years,
we know
okay.
that's short.
Yeah.
But we have it's one of the reasons why we bought that company. We saw the potential from an exploration standpoint that the company has. And we started that exploration campaign last year. We allocated a couple $1 million last year, a couple of $1 million this year.
Right.
We already made some announcements, and it looks very promising.
Why not more money? I know it's hard to play a lot of exploration at the same time, but given its 5-year life of mine, does the amount that you're dedicating to that suggestive that you don't think there's much
No,
more
I
to be
think this
had?
is the right. I think it's the right approach. Our intention, and like I said, we are well underway on our exploration plan. I think we will, and we have been announcing to the market. I think our expectation is that more towards the end of the year, we will be able to announce at least to have a new internal MRI report, or even probably early next year, a new technical report. And we're quite confident, based on what we are already seeing, that we will be able to extend that life of mine.
Okay, and it used the word realistic there, which I quite like in this game because it's rare. What do you make of all the executive orders being signed in North America? Is that part of the attraction to go to North America, or do you think that's just talk?
Well, that's a good question. There's always two ways of seeing it, right? What's happening in the U.S., it's creating uncertainties, right? And as an investor, nobody likes uncertainties. It's helping gold prices on the other hand, right? From the permitting standpoint, yes, it is. It is changing. I know that there's a direct instruction to speed up permitting, and we've seen it, right? So actually, on our M&A efforts, we are willing to bear a little bit more of that permitting risk because of what's happening in the U.S.
Right, and again, to come back to kind of margin, obviously, in North America, at these sorts of prices, I guess lots of people are making money, but consensus prices, what, 2,400, I think, at the moment. You've got to have a long-term view on gold. Does that kind of shape your thinking around, well, maybe silver, or maybe copper?
Yes, well, first of all, you always have to think in a counter-cyclical way.
Yeah.
Right? My intention right now is to lower my operating cash cost, my all-in sustaining cost. Right now, at my operations in the U.S., our operating cash cost is around $1,500. It goes to $2,000 all-in sustaining cost because of all the capex that we're investing, but we have a very good margin.
That'll come off.
But we're not stopping there, and our intention, and more towards the end of the year, is continue with that plan I was telling you about, the optimization of both the plant and the mine, and see a reduction on our operating costs, right?
Okay, so the rest of this year, you're in control, you got money.
Yeah, I think
it'll happen at your pace.
I think things are looking good. Like I said, we have two good producing assets. We're cash flowing. We have a very strong, good balance sheet for a company of our size. $100 million in cash, $80 million of liquid assets, very little debt. I think we're well positioned to continue, growing the company both organically and probably we'll do an M&A deal this year.
JC, appreciate your time today. Good to hear your story. Thank you very much.
Thank you.
Okay. Thank you, everyone.
Thank you.